All right, it is 8:09 a.m. Central Time, and we are jumping right into the trade planning exercise. So for today's plan, the idea is that we know that sellers are in control and the market is now in search of buyers. We saw a nice response in the overnight session at the 45.09 quarter to 17.75 zone, which has now been adjusted to 45.07 half to 14 half, just to take the open gap at 07 half into account. Now, given that we have Amazon and Apple reporting earnings after the close and we have the employment report due tomorrow morning, we may just hold above initial support. At the same time, we know that sellers are dominant at the moment. We are in a multi-day balance breakdown pattern, and the market is in search of buyers, so we may have to head lower in order to find those buyers. The market may have to run some stops, and then perhaps we have buyers stepping in. So I'm going to set up a trade at initial support as well as the 44.91 quarter to 4500 quarter area, which is a larger time frame bull bear zone. And ideally, we want to see buyers active and holding the market above 44.91 quarter to 4500 quarter today. And from there, we want to see a move back above the broken initial support zone and then into yesterday's low and potentially the overnight high area. So we can get some bigger targets off of the 44.91 quarter to 4500 quarter zone and technically even off of initial support. Because if we hold initial support, then we should at least be able to hit pre-market resistance and most likely the overnight high area as well, as long as we're holding initial support. So with that assumption in mind, and with that hypothesis, we can target a move back into at least yesterday's low off of initial support. And then beyond that, we can target a move into the 44 quarter resistance, which is just a few points ahead of the overnight high. And when it comes to target setting, I'd rather get out a little bit ahead of the key level rather than try to squeeze an extra 2 or 3 points out of it. So 12 half gives us 3R. So that is a potential trade that I will consider this morning. After that, we can see that our next entry is at 44.98.75. Now, given the significance of that support zone, I don't think it makes sense to try to get the absolute best entry possible at 44.98.75. Right now, the overnight low, I believe, is around 44.10 or so. So we can target that as our scale out, right? So we can get a little bit more aggressive on this, and we can target 09 quarter as our scale. Our high probability remains at 27.75, and our final target again will be 44 quarter, which gives us pretty close to 3R. And depending on the real-time intraday situation, as long as we're not heading down into the bull bear zone on significant downside momentum, I think that a entry towards the upper part of the zone is going to be the way to go. So I'm going to leave this at 4500 quarter top of zone at the moment. And then in real time, if it seems like the market is just heading down on excess weakness or unusually large downside momentum, then I can very quickly adjust that entry to middle of zone with one click or even back of zone with one click. And of course, I can always just adjust it manually if need be. And depending on, again, the real-time situation, I may even choose to risk a little bit more at the zone. So I might actually increase my risk to 1.5R instead of 1R. And that way I can just get more out of the trade. So that is something I will decide in the moment, in real time. And if I don't change anything and I just take it at 4,500 quarter, let's say, it's still a decent trade. And if we only get to 27.75, which is yesterday's low, it's still giving 2.25R, not too bad. Now, I'm not anticipating a break of 44.91 quarter, but with the market, you never know. And again, this is a preparation exercise, right? Doesn't mean I have to take each and every single trade here. This is for mental preparation, technical preparation, so that when the market is heading down into that zone, you don't have to do the mental math. You don't have to think about probabilities. You've already made up your plan. You are decisive, allows you to execute decisively. That's the benefit of doing this exercise. So in the event that we do head lower, I will want to buy even 74.5. And again, the caveat here is that we are not seeing trend down type conditions. I'm not expecting back-to-back trend down days, given that our intermediate term bias is still bullish. But again, you never know. So as long as we're not heading down in trend down type fashion, I would expect buyers to step in here, and I think there would be a good shot at moving back up into yesterday's range as the market heads into the Amazon and Apple earnings after the close and tomorrow's employment report. So on the long side, these are the setups that I would consider. And again, even if the market pushes into 44.74 half to 84 half, I still think there would be potential for a pretty decent intraday reversal back up into the 45.27.75 area. So I am going to leave the high probability target at 07.5, but in this case, my final is going to be 27.75. That allows me to get in a little bit at a higher of a price, which is good. And I am going to make just one copy of this zone. And what I'm going to do is put my stop behind 70 in this case. Again, I don't anticipate that I will have to be this conservative at that area, but just in case, I'm going to set this up as well in the event that we are heading down and it looks really ugly in real time. Well, I still want to buy 79 quarter, and I'll put my stop at actually 69. So I want to buy 78.75 or 79 and stop 69 because I expect this area to be a range exhaustion area. So I don't think we're going to go. I don't think we're even going to head down here, but in the event that we do and it looks really ugly, I may still want to buy 79 as long as it's happening in the first 3 to 4 hours of the trading session, as long as it's not the last hour, let's say. Last hour zone fades are off the table, but in the morning session especially, this would be a very good trade. So that is on the long side. On the short side, I think that the pre-market resistance zone, which is 45.27.75 to 37 quarter, is too aggressive of an area to just outright fade. I think it's a good spot to use as a target on any long setups, but for me to trade yesterday's low as a short setup, I would need to see significant signs of intraday weakness. So absent that, I am not planning on trading 27.75 to 37 quarter on the short side. I think it makes sense to still set up the trade there. And in this case, I would like to set it up where if the market only goes to 14.5, I can still get 3R. So if I'm going to take a trade that has perhaps more risk of getting stopped out, lower probability of working out, then I want to trade it in a way where the market doesn't need to do something significant for me to get the 3R or 4R out of it. So when probabilities go down on a trade setup, I want my risk reward expectation to go up to maintain a healthy overall expectancy. So I may even want to get a better entry price, perhaps closer to 36, which is close to yesterday's VPOC of 36.5 and close to the gap fill. So I may want to actually set it up this way, where if the market does go down into initial support, at least I am getting paid for taking that extra risk or the lower probability trade. And again, I may just not trade it at all. I think it's an aggressive area of resistance, so I'm not looking to actively trade that zone, but sometimes in the moment, a trade can set up that looks quite good based on the real-time information. And if you're also getting quite good trade location, then it can be worthwhile. The zone where I anticipate sellers to be active in a more meaningful way is going to be around the overnight high and the 50 half to 60 half zone, and especially near yesterday's RTH high. So, as I mentioned in the morning video, the higher the market pushes, the higher the odds of sellers stepping in. Now, I'm not anticipating a test of yesterday's RTH high. Typically after this type of sell-off, getting a break of the previous day's RTH high is low probability. Again, especially given that we do have a potential catalyst after the close. And right now, the sellers are more dominant on the short-term time frame. The intermediate-term bias is still bullish, but our short-term bias is neutral bearish. So I'm not anticipating a break of yesterday's high. And that is why we can trade the initial resistance zone on the short side. We can look for sellers to be active at 45.66 quarter to 72.75. And as the market pushes higher, all of these are spots where sellers are likely to be active. 45.88 to 96 is a strong area of resistance. It also marks a range extreme. I am not anticipating the market to hit that area. As I mentioned in the morning trade plan video, we already got volatility expansion. We saw a very large range yesterday, and I'm expecting today's 24-hour session range to be lower, smaller than yesterday's 24-hour session range. So the likelihood of the market going up into 45.80 is pretty slim, but if it does, then sure, we'll take a short. So 67.5 we can see is targeting a move down so we're scaling out ahead of the broken initial resistance. That is good. The high probability in this case, I would want to be above yesterday's first hour low. So I'm going to set this to 52.75, and then the final can be the overnight high area. And again, I want to get out ahead of that. So 48.75. Based on that, 69 would give me 3R. And if we only hit 52.75, I'm still getting 2.8. So I'm actually going to adjust this entry to 68.5. That way, even if we just test the broken initial resistance, I get 2.5R. And if we go lower, we get 2.74, which is fine. We don't always have to optimize for 3R. So that is good to go. This looks fine, although again, I'm going to change this target to 52.75 because I think if we end up taking out yesterday's high, then that would be relatively bullish. And even though we can still get a response at 80 quarter to 86.75, I would not expect to move all the way down to the overnight high area. So in that situation, we may have to just get out at 60.5. So that gives us 81 quarter and 79 as the 2R entry. So on the short side, that is what I'm thinking. And looking at the overnight high area, what we can actually do is make a copy of this zone as well. And I'm going to set up a trade where my stop on the overnight high area is behind my next entry of 54.75. Let's review the targets here real quick, actually, because I think that if we test 50 half to 60 half, we're probably not going to go down towards initial support. So I need to revise this entry. We're scaling out around the overnight high. High probability is the previous day's close area, so the broken resistance, which can act as support. So let's get out a little bit ahead of that. And our final target, I don't think should be below yesterday's low. I think in that situation, getting out ahead of yesterday's low would make sense. So 55.75 would give us a nice short setup up there, and I'm going to change this to 56. So 46.75 off the overnight high, and I think I'm going to adjust these targets as well, because I think if sellers are active at the overnight high area, we may not go all the way down to the overnight low. So I'm going to make this 14.5, and yeah, that should do it. So 47.25, 41.75. Okay. So those are our potential trades. And if I'm going to be conservative here, then I might as well put my stop behind 42 on this one as well. Just to be a little on the safe side on that short, and it's still a healthy risk reward. So, I think you can see that because of the big move that we've already gotten yesterday, if we head into the overnight high and the initial resistance, I'm expecting consolidation, and that's why I'm not trying to be overly aggressive on the short side. Now, I'm not being overly aggressive on the long side either, unless we're testing that bull bear zone, right? That I think warrants being aggressive. But at the initial support, we're looking at 12.5 as a potential entry. And again, that's something that I think does require that real-time market read, because my concern is that we might get a poke below the overnight low. Perhaps we even get a poke below initial support, and then we reverse. So it kind of becomes a false breakdown pattern from the overnight range, which then sets up the move into the overnight high area. So with that scenario in mind, let's make a copy of the initial support zone and set up a trade at the back of the zone. And again, we are going to put our stop at 4,500. So this is what I would call daisy chaining the setup, where you're getting in at one zone with your stop just one tick behind the entry of the next. So if you submit both of these trades, and your bigger idea is that larger time frame buyers can be active at either of these zones, and let's say you get stopped out on the first, you get automatically, or you're instantly filled on the second trade prior to getting stopped out, and that way you are able to at least test out that hypothesis fully. Because I'm sure many of you have experienced this, where you fade a zone or you fade support, get stopped out, your next zone either doesn't get tested or your order doesn't get filled, and the market turns around just a couple of ticks ahead of your entry order on the next one, and that's where the big move happens, and that is super frustrating. You are sitting on the sidelines, you've taken the loss, missed the ideal spot, and I would rather lose 2R by daisy chaining the setup and just take even 2 or 3 losses in a row than take one loss, miss my next entry by a couple of points, and then watch the market do what I expected it to do. That scenario is more frustrating than taking 2 losses or even 3 losses in a row. So this is a variation setup at initial support, where if in real time things are looking quite weak, or let's say NASDAQ is taking out a certain level and it's now approaching support or something, and I feel like I can get a better entry, these orders could work out really well. So these you can submit even in advance, and I think it's a relatively safe play. So that's going to do it for this morning's prep. It is 8:28 a.m. Central Time. Market opens in 2 minutes, so we will wrap up over here. Good trading, and until the next one.